So it's always this time of year. We're, getting more towards spring. That inventory starts to rise. We start seeing an increase in transaction, pending sales go up, and we still have a lot of buyers that are sitting on the fence with some concerns.
Yeah.
So let's try and alleviate some of those concerns. So when a buyer says, well, homes are overpriced, it's just not affordable for me, what do you tell them?
I just tell people that they might not be, or they might not seem affordable, but rent's not affordable either. And if you're going to be paying that out of pocket every month, you might as well pay yourself.
Yeah,
right?
sure. I mean, you got to live somewhere. So, I mean, you're either paying money to somebody else or you're kind of paying yourself with a forced piggy bank, because a portion of that it's your money. It's going to come back to you.
Exactly.
Yeah. What about like financing challenges? So, I mean, we always tell people, go get pre-approved, find out what you can afford, what your monthly payments will look like, rather than just winging it and going, I think I can afford that home.
Right.
Let's go take a look at it and waste everybody's time, right? Because you
Right.
don't know. Maybe you can afford more.
Yeah, well, maybe you can afford more, or maybe you can't afford what you're looking at. So I think first thing is we always want our clients to go and get pre-approved so that they know what that monthly payment is going to look like and they're not shocked. Usually, I think they're shocked in the opposite direction. They're usually actually kind of pleasantly surprised and realize that a house is way more affordable than they thought it was.
Right.
So, but I definitely think to squash that or alleviate that fear, they need to just go and do the work up front and, just put in their inquiry and talk to a lender,
Right. Right. And I think the other thing people worry about is like, well, if I get pre-approved, that's going to hurt my credit.
Oh, no.
Right.
Yeah, I mean, that is the biggest fear I think we hear, at least I hear on a daily basis, is I don't want to put in my inquiry just yet because I don't want it to affect my credit. And I've been trying to get my credit, up. And everybody's heard the 640 is the kind of minimum. I mean, we like it higher, obviously, but, some things happen and, you don't have maybe any control over. You might need to put something on your credit card and it might have lessened your score. But the one thing that does not lessen your score is having a soft inquiry pulled.
Right.
So,
and typically, when a lender pulls your credit, it's just going to be a soft inquiry, not a hard one. So there's a difference. It looks like an inquiry. It's not a credit pull necessarily. So
right.
The other thing is when you are, say, shopping for lenders, if you want to shop around, you can do that multiple times within a specific time frame. So say 2 weeks, you can go around and they can all pull your credit history, and that only counts for one pull.
Right. Yeah. Well, I do think it's really important regardless. It doesn't affect it negatively. It's when you start the process of actually purchasing that it becomes a hard inquiry. And it really doesn't hurt your credit even then. It's just, it might affect the points a little bit, but it bounces right back. And I promise you, if you're worried about having good credit, buying a house definitely increases your credit score. So
yeah, it'll bounce back after that first payment.
Yeah.
And then bidding wars, right? Are we seeing bidding wars? And like, I don't want to get into a bidding war, so.
I have always hated the word bidding war. It's just multiple people riding on the same property. But no, we're not seeing that. That craziness that we were seeing back when there was very, very low inventory, very little across the nation. Then there were lots of buyers and the interest rates were very low. So we're not seeing that again. We do still see on specific houses that are really, really popular, or something. If you see it online and you say that is the house, other people have probably said that as well. And if it's priced correctly, you'll still probably have multiple offers. We just had an incident recently where our client felt like our buyer wanted to go in 50,000 under because it had been on the market for a few days, you know. They had read in AI or online that that was a good strategy, because if they went that low, then the seller would come up and then they would meet in the middle, and all it does is upset sellers. So if you do find yourself in a multiple offer situation, it's always best to, if that's the house you want, then put all of your cards out up front. Really, I mean, because the negotiations start first getting the offer accepted, second getting through that inspection and the repair period, inspections period, and then you've got getting to close, you know, so having it appraised properly. A lot of times we have clients who will be worried that in a multiple offer situation that they're going to overpay. And I always say, you're never going to overpay for a property that you want. And those, you know, every $10,000 increment just affects your mortgage payment by, you know, if it's 6%, you know, it's going to be $60 a month, you know. So we don't want you to lose a house over a cup of coffee, you know.
Right.
Really.
Yeah, that's true. You know, hidden problems with the house. Like, I walk through the house, it looks great, but I can't see in the walls. I can't see in the crawl space, the attic. I don't get on the roof. What if something comes up during the inspection? What do we do?
That's what inspectors are for. I mean, truly, we just had this happen in a different file. We didn't know what the house looked like, but we could see with our own eyeballs that there were a couple of issues. And the inspector got there, and the first time in over 15 years, I had him tell me that we should burn it to the ground. Really, truly, every house can be fixed. Every problem can be fixed, but sometimes it is maybe a little bit more money than is palatable for the seller. And in that event, you know, that's what that inspection is for. It's an insurance policy that you're not purchasing a property that is a money pit. But every problem has a solution. So what we like to do is try to find the solution before we bring the problem.
Mm-hmm.
So, yeah.
And sometimes that solution is gasoline and a
No, that's ours. Don't do that.
Like Courtney said, there's always a solution to a problem, and that is part of our jobs, is trying to find that solution during that 10 business day inspection period.
We could make it 20 business days. We can also make it 5 business days. So, I mean, we can make adjustments. I always, you know, most people get concerned with things that I promise you don't, it's like a buffet. You don't have to eat all at once. There's multiple options, and each strategy is similar, follows a similar process, but we can adjust, make movements to the dates and the time. So that contingency can be longer than 10 days.
Right.
But,
and another thing we hear often is like, I don't want to overpay for the house, right? If we say, hey, you know, you're going to have to go in at listing price, or maybe slightly over if there is multiple offers, right? And so, you know, what do we tell people when they say, I think it's overpriced, or I'm overpaying for the house?
I know I probably jumped the gun on that last one, but you're never going to overpay for a property, because an appraiser is going to come in and find value for it. And if in the event that it does not appraise, typically that's when the buyer, most buyers make a decision at that point. Do I want to come up with the difference to make this work because I really love this home, or is the seller willing to come off that price? In all my years, I've only had an appraisal. I would say in, you know, one hand, I've had 5 different appraisals not come in at value, but they've never been a large difference, a large enough gap that it made a difference. Most of the time, the seller was willing to come off of it, and the buyer was willing to make an adjustment. But the bottom line is that as long as you're staying in the home for a good, you know, well, I used to say 2 years. Now I'd say, I think that you should stay in your home for at least 3 to 4 years to really recoup any of the equity that you might have, you know, might lose out on if you sold before that 2-year mark.
Yeah, I think so. And people are so, like, they can't see long term. It's a lot easier to see short term. And so they think, well, what if I have to sell like tomorrow? It's like, well, that's very unlikely, but if you're going to stay in your home for three to
Right.
5 years, you're going to be alive. You need somewhere to live.
Right.
So hopefully you think I'm going to be alive in 3 to 5 years.
Right.
I'm
I
still
mean,
going to be in the same house for 3 to 5 years. You're going to recoup your money and then
right.
some. I mean, even if home values drop 1 or 2% over a 1 year period,
Right.
you're still paying principal down. So, in 3 to 5 years, you'll make your money back and then some it with
For sure.
whatever appreciation you get.
And also, if you were breaking a lease, you're still going to have to pay a
Right.
break lease fee. So, I mean, regardless of where you're living, at least if you're breaking the lease with yourself, and you're having to resell it, most likely you're going to recoup that money back. But I find it one of the most interesting things that people say often is, I don't want to overpay for this property. And I just think the smart thing to do is you're never going to overpay for it. If it's the house you want and it's the right house, the freakonomics of it is your payments only go up incrementally based on what you're borrowing over the 30-year amortization. So it's not quite as astronomical as saying, oh, I'm paying $100,000 more for this house. And really, the bank's paying that 100,000 more, and you're paying it in a monthly payment over time. So,
Mm-hmm.
I mean, I think your cash on cash return always makes more sense than not getting the house you want
Mm-hmm.
because of an extra 10 grand.
Yeah. Yeah. And then I would say the last thing we hear often is the market's really volatile right now. I'm worried that there's going to be a housing crash.
I mean, I don't really have a response to that per se. I mean, it depends on what kind of buyer I'm talking to at the time or what kind of product that they're purchasing at the time. I mean, how do you usually deal with that
I
objection?
think I think it just goes back to living in the home for a period of time, right? Not thinking so short term and thinking long term. And historically, over the 50 years,
Right.
home prices have always appreciated. And if you look at the graph, it's, lower left
Right.
to upper right, it always grows. So,
Right.
I mean, I wouldn't be too worried about that. And trying to time the market is impossible. I mean, we were just at a 5.99% interest rate
Right.
last week or
Right.
about a week ago, and then something happens and now interest rates are at 6.4%.
Right.
So you can never time it. You never know what's going to happen from day to day. So but if you look long term,
Right.
you're going to benefit yourself by
I
just moving forward and not being so hesitant
right.
about purchasing and thinking you're making the wrong decision.
Right. And I also think, to that question or to answer that question, candidly, is that micro versus macro markets make a huge difference. Here in Portland, we're a city that's built from the outside in. So that means that we have an urban growth boundary that has been placed on us at one point many, many years ago, about 5 decades ago, where we cannot continue to build past that point until that urban growth boundary is opened up. So that keeps our inventory levels low and it keeps our prices high and it stabilizes the market. So even in 07, 08, we didn't see that same crash that they did in places. And I'm not picking on anybody from Vegas or anything like that, but Las Vegas is a city that is built from the inside out. So it just is able to keep going and it's expansive. So housing prices aren't going down historically. You might have a dip, but there's no death cross that's going to happen. Historically, if you were able to hold on to your home in 08, you came out of it very, very well, even if it took a couple extra years. So,
Yeah.
yeah.
Well, that's all I have for you guys. I hope that helps with some of your concerns. If you are thinking of buying or even selling this year, feel free to give us a call.
Yeah.